Hello, ladies and gentlemen. Jay Tyler here. Welcome back to Jack Fund Management. 576,000 Americans filed new jobless claims, a pandemic low, versus 700,000 anticipated. Bank of America, ticker BAC, beat top and bottom. Expected investment banking revenue sprung up 46%. It remains no secret cyclical and value will tend to outperform as rates rise. Month 3 saw a soaring 9.8% U.S. retail sales print. Coinbase started as a liquidity event. Insider sellers aimed to get out as ultra-low rates permitted businesses to remain private a bit unusually long. They could keep borrowing and borrowing money quite cheaply. For example, Uber remained private for almost a decade. Coinbase can bring a ton more focus to crypto, yet valuation questions arise. Abroad, London has seen fresh financial career position openings and more advertisements than pre-pandemic levels. FANGs trade at pre-pandemic multiples, yet they came out post-pandemic as far higher ranking assets. SpaceX, ticker SPACE, has a current evaluation of about $74 billion. Starlink, ticker STRLK, could start trading as an IPO. SpaceX intends to initiate a moon launch 2022. Falcon 9 has a schedule to deliver a UAE exploration rover. Skyline Champion, ticker SKY, offers tremendous opportunity to play this housing shortage and sky-high demand. The second largest producer of manufactured homes, Sky dominates 17% of all U.S. domestic share, second only to Clayton, which one cannot buy individually, as Warren Buffett with Berkshire Hathaway owns it. While managing largely out of Indiana, Sky runs most retail functions in Texas, Florida, which has enjoyed some astronomical housing demand and a blazing market. Manufactured houses embody a compelling affordability proposition. For this past decade, on-site home price has gotten magnified by approximately $100,000, while 80% of homes sold under $150,000 come from manufacturers. While this virus created a temporary peak, house prices remain stable. Cheap money has buoyed real estate. Sky has an exquisite ratio of 2.10 and DTE ratio of 0.23. Translated to Skyline Champion far exceeds a capability to cover all liabilities with assets, twofold and over. Contour Brands, maker of Lee and Wrangler jeans, saved a ton of cash, built a formidable liquidity position, and reinstated a fairly large dividend. Many North Americans own likely several pairs of jeans, and Wrangler had $1.5 billion in 2019 revenue, opposed to a Levi's slightly falling out of favor with $0.9 billion US. Management sustains delivering on this promise to expand margins. A standout at a forward PE of 12.9, peers like Strauss smashing estimates could reflect onto Contour, denoting a persistent rebound in apparel. Almost a tenth of a billion smaller restaurants closed for good. This could partially explain moves in stocks like RRGB. Americans at this point have some abounding liquidity, trillions in disposable funds. Where would they spend it? A neighbor could go to Six Flags, a family and kids may go to SeaWorld. Uber CEO underscored that it intends to do cannabis delivery. In 1990, US accounted for almost 40% of global chip manufacturing. Today, it only makes up 12. It intends to get back up to 20. Some figures like 30, likely a bit strong on optimism, got floated. This White House chip summit joined 19 executives, Alphabet, Ford. They met, talked R&D, and how this symbolizes a national security risk. $50 billion in subsidy came of this. A start. Statistics show it takes about $15 billion to construct a state-of-the-art chip plant. NAPCO Security Technologies, ticker NSSC, has a healthy balance sheet, has zero debt, keeps growing margins for nearly every evaluation metric. NSSC has something investors would love to see. They have gotten trusted to safeguard schools and campuses such as Stanford, Pepperdine, Columbia, NYU, and UOM. CEO Richard Soloway has safety and electronics expertise, while leadership owns about 40% of NAPCO. With growing awareness about violence, expanding demand for smart locking systems, NSSC has really stood out as a protection leader idea. Many of these SPACs did absolutely nothing, yet they did in part give a much brighter than first anticipated economic outlook to big banks, and all banks as a whole. Due to nearly absurdly high SPAC volumes, many investment banks made some hefty fees. Exonics, ticker AXNX, develops sacral neuromodulation systems, or NSMS, obtaining approval in Europe and Canada. Larry Culp, CEO at General Electric, ticker GE, so far has done a masterful job. This, one of many, really highlights management boon aspects of businesses and stocks. GE has majorly cut debt while combining with AerCap. Due to current economic environment factors, GE pounced on AerCap, seizing it at a remarkably reasonably priced time. They will capitalize with massive upside room within this aerial transport, aircraft, helicopter engine leasing arm, as travel demand gets expected to more fully rebound into 2023. GE also has secured giant contracts for renewable energy wind farms. They manufacture, install, and maintain converters, converter stations, and all supplementary equipment. ARK Invest bought more Snapchat. This Fed beige book stated all input costs increased. We have higher valuations, which, keyword, may get met with earnings growth. If this economy grows as Powell establishes, it can logically follow that they would not have to grow this balance sheet more and convey such dovishness. Prices of durable goods surged higher, up 3.7% from 2020. CPI inflation means smaller purchasing power, largely driven by Powell pushing perma-inflation. Facebook, ticker FB, another stalwart, got a price target boost to 340, with bullishness on inbuilt commerce strides and a top 3 if not strongest digital ad platform. Oil reclaimed over $60 per BBL. Common oil parlance for 42 gallons or a barrel. OPEC hiked 2021 demand estimates. Chinese trade documentation showed imports in dollar denomination rose 38% year over year, surprising many analysts. Atlassian, ticker TEAM, launched itself into enormously green territory once more, handing out preliminary Q1 revenue guidance. $556 to $572 million for Q3 2021, $85 million above a midpoint, above Q2 2021 forecasts. Operating margins on an IFRS, International Financial Reporting Standards, basically a set of common rules to give consistency and transparency world round, and non-IFRS basis anticipated to outshine Q2, plus FCF for Atlassian expected to impress moreover. On another inflation note, food prices increased 3% year over year. 2 more months of 0.5% headline inflation could yield above 4%, which the US has not had since around 2008. Apparently people love to put out minute-by-minute noise, yet US markets just had 2 weeks of no greater than 1% move intraday, which has not taken place in almost a decade. Volatility could ensue, yet most reports state that we now have a second year of a bull market, which usually brings a plus 17% move upwards on average by year end. MasterCard spending metrics show non-cash payments rose 2.5%. Online grocery spending has shown valid stickiness. 6.6 million homes presumed to sell for 2021. Such an eye-popping number has not circulated since circa 2005. Not only this real estate market has had intense velocity, with new construction starts also jumping. Some houses get listed and delisted within 3 days. Delta looks for international borders to open, sees profitability in 2 months, and has reached cash flow positive, while the US Dow crossed 34K. Strategists race to catch up to actuality from conservative estimates on some better businesses. A lot of businesses have reported taking price action, i.e. raising prices, passing inflation costs on to consumers. Epic Games maker Fortnite and others has received serious players in a funding round. Epic's CEO commented, "Powered with the Unreal Engine, these investments from names like Fidelity can help accelerate work around social games like Fall Guys and connected experiences." Tencent, ticker TCEHY, owns a 40% stake in Epic. API, American Petroleum Institute, showed U.S. crude supply dropped by 3.61 million barrels for this week, 4/9. Gas prices have elevated by 9%. Blockchain, very roughly a system of ledgers, precisely like on which this current financial system runs, could stir things up with Coinbase. Crypto still likely has much more disruption to do, as governments try to catch up to chase it. Really, once in a generation, a newer type of asset class emerges. Month 4 of this year, market volume showed signs of lethargy. It seems many younger traders and/or retail traders got led astray. Plus, U.S. debt has reached a point fiscally impossible to repay, In a bit of a cavalier manner, the US has spent itself into quite a lull. America enjoys world dollar reserve status, principally a most powerful and privileged status ever. Yet headed on this path, that could get called into question. Coinbase could stand for a picks and shovels way of getting exposure to this asset. Coinbase within it contains Bison Trails, a program which empowers infrastructure within many crypto ecosystems. Chamath and Bandit Branson snuck out of that burning rocket called Virgin Galactic. Bitcoin ETFs could surface. Purple Innovation, ticker PRPL, has started to revolutionize sleep. For 3 decades, they labored on comfort tech. Since IPOing in 2018, Purple has staggeringly tripled annual revenue, from $200 million to $648 million. They have also strived, keeping operating margins up and raising, showing sagacious management and efficient scaling. Another fortified balance sheet, Purple has plenty of cash, a far more than safe debt to equity, and trades at a pretty low time sales. Not only this, TAM, total addressable market on this sleep economy, makes up an enormous number internationally and domestically, with Purple holding sway over about 3% of a whopping $14 billion. They have product markets not just in mattresses, rather furniture, pillows, airline comfort, pet bedding, and so on. American Airlines, ticker AAL, voiced cash flow positivity this past month. They said they have approximately $18 billion in accessible liquidity in Q1, after initially assuming only $15 billion. Combine all this with the fact that American did not even operate at normal levels, flying only 50% that month. TSA information indicates occupancy levels of up to 60% of that of 2019, which can further propel cash flow in Q2. Meanwhile, American pre-reported net bookings hitting 90% of 2019 standards. Airlines still have not upped capacity. This past week, ASMs landed only 36% of pre-pandemic tiers, while RPMs hit 48%. Very airline-related, Avis Car Group, ticker CAR, has surged 448.66% this year, more than high-flyer Tesla and Square. Taking advantage of vaccine distributions, lifting of local restrictions, TSA screenings rose substantially, and so did car rentals. While Hertz filed out, Avis took business from them, having good ABS, asset-backed security entity structures. They also have a witty brand Zipcar. Thank you for stopping by. We appreciate you all for watching. Join us, join Jack next time.